In today's real estate market, homeownership can feel out of reach. Many are turning to borrowing a down payment. But is this the right choice for you? Let's delve into the advantages and disadvantages of this approach. First, borrowing a down payment can speed up your path to homeownership. Instead of waiting years to save, you can buy a home sooner. This move can be a game changer for many prospective buyers. Next up, borrowing allows you to leverage existing assets. If you have investments, you might borrow against them. For instance, you might have $100,000 in investments and borrow 70% for your down payment, keeping your investments intact. This strategy can also lead to potential investment growth. If your investments perform better than your borrowing interest, it could pay off in the long run. In a competitive real estate market, having cash ready can give you an edge. Borrowing for a down payment may provide the liquidity needed to act quickly when you find the right property. Moreover, there are diverse options for borrowing, such as personal loans or credit lines, allowing flexibility in meeting your financial needs. However, there are significant downsides to consider. The first is the increased debt load. With a mortgage and borrowed funds, your monthly commitments grow, which can strain your finances. Higher monthly payments can arise from this additional debt. This situation might limit your financial flexibility and impact your budget. Also, loans for down payments might come with higher interest rates. This could lead to increased overall borrowing costs. Another drawback is the reduction in home equity. Borrowing a down payment means you start with less equity, which can limit your financial options later. There's also a risk of over-leveraging. If home values drop or your finances change, you could face negative equity. Furthermore, lenders might scrutinize your application if they see you're borrowing for a down payment. This could affect your approval or result in less favorable terms. Before proceeding, evaluate your financial situation carefully. Assess your income, existing debts, and goals to ensure you can manage additional commitments. Analyze the borrowing costs and compare various options. Understanding how these will impact your long-term financial health is crucial. Recognize the risks of higher debts and reduced equity. Ensure you're aware of how this decision may affect your future. Consider consulting professionals like financial advisors or mortgage specialists. Their insights can help clarify how borrowing fits into your financial strategy. Finally, always plan for contingencies. Develop a backup plan to navigate unexpected financial changes effectively. In conclusion, borrowing a down payment can help you achieve home ownership quickly. But it's essential to weigh the benefits against the risks carefully. By understanding the pros and cons, assessing your finances, and seeking expert advice, you can make an informed decision. Ensure that your journey toward homeownership is sound and sustainable. Remember, careful planning is key to your financial success. Be sure to visit financiallywise.ca so you can use our free budgeting tool. Also use the link below to visit our HomeWise partnership page. It's the easiest way to get the best mortgage in Canada, whether you're buying or refinancing.